All right, let's take a closer look at the tech sector this morning. Joining us right now is Doug Clinton. He's the founder and CEO of Intelligent Alpha. And Doug, we've been watching this drawdown in tech stocks, particularly in some of the big names where you've seen declines of about 20%. The NASDAQ, though, down by about 13.6% from its high. You think that drawdown is more a reflection of concerns about tariffs or more a reflection of doubts about AI?
Becky, I think it's probably a little bit about both. I think that tariffs in some ways are probably the proximal excuse for investors to sell because AI has had such a run for the last 2 years. But I think what's really striking is if you really think about and look at more recently, what has been the commentary around demand for these AI services? We just had OpenAI say that they are capacity constrained with their new image gen model release. Grok, XAI, saying the same thing. Meta, similar commentary via Morgan Stanley. And so the demand for the services is there, but the story has just been broken for investors. And I think that people have been very skittish around AI this year because they're waiting for that sell-off. Now we've gotten it. I don't know that AI will roar back in the next week or month, but I do still believe that we're in this 2 to 4 year window of an AI bull market. And I think you want to stick with some of these names.
Which names in particular?
So at Intelligent Alpha, we use these large language models like Grok and like Gemini to pick stocks, do stock analysis. And on the hardware side, our models still like Nvidia. We also like TSM and Micron. So our models think there will be a return to hardware where, again, we're still seeing strong demand signals. On the software side, I think that's another interesting place, too, that hasn't gotten as much run as hardware, obviously, in this bull market. HubSpot, HUBS, is one that our AI models really like for seeing inflecting numbers back half of this year.
Doug, I know you've talked to us about this in the past, but what are your models measuring? What are they looking at? How do they come up to this assumption that this is going to be a place to be? I guess the assumption is that there's going to be a lot more money spent on chips.
That's right. And the way that our models work is you can think of them as sort of similar to human analysts. And I always love the analogy that large language models are the best improv actors that you'll ever meet. And so the way that we've created our models is we've created an analyst that looks at a broad set of stocks, and then we've created a portfolio manager that then will take that work from the analyst, just like a human PM would from a human analyst, and say, look, here's what we understand about this broad universe of stocks, AI stocks in the case of Nvidia, TSM, Micron. And then we want to construct a portfolio that is sort of risk adjusted. It reflects our confidence in what we think in terms of forward earnings outlook for these stocks. And that's how our end portfolio ends up being constructed.
I mean, the AI analyst isn't doing channel checks. Maybe they're just reading everything to see what's been publicly reported about what's happening with the company or the companies that spend a lot of CapEx on those chips.
That's right, Becky. They are doing, I would say, probably more information consumption than any human analyst could because of the scale that these models can operate at. But the channel check thing is interesting. And I see a world where we've experimented with this at Intelligent Alpha. We will have AI in the future doing channel checks, doing customer calls. The voice interface is pretty much there to replicate what a human analyst does. The one area that's still tough is, going to conferences, doing some of the in-person things that humans can do. That's one area where AI will struggle, but I think the channel check thing will happen and we will make it happen.
But channel checks, I mean, I always thought of it as an analyst who had deep sources that they could, almost like a journalist where you have people you're talking to, you're really getting a feel for it. As you mentioned, they can't go to conferences and along those lines. How do you supplement that?
I think it comes down to incentives. I think we've seen these platforms like Tegas, for example, where you've built out expert networks where people are willing to share what they know for a price. And I think that AI ultimately will be able to play in that field. And it's funny, I think having AI agents be able to pay humans to do work or to answer questions is going to be a really important part of the frontier. And there's a company we actually invested in at my other firm, Deepwater, called Payman, that's enabling this technology. So if you're thinking about startups and just what will be the next big thing in AI, I think figuring out how to let AI pay human beings will be a really cool story over the next 2 years.
I guess in virtual currency or some other way you go through it.
We want to do it in human dollars, that intelligent alpha, and that's ultimately what payment is doing too. I think, crypto could be a thing, but most people just want cash because it's easy. We know how to use it.
Yeah, Venmo. Doug, very quickly, can you walk me through the price points that you see? Like Nvidia shares, I think they're down more than 11% just over the last month. What's the price target or the price trigger that makes you think, okay, this is definitely something I'd stay in? For the 1 year, it's still up by about 20%.
I think we're pretty close to those levels now. I mean, you look at the PE on Nvidia, we're kind of low 20s. We were high 20s earlier this year. So I think a lot of the altitude has been taken out of this stock already. And again, I think I go back to those demand signals. There's still a ton of demand from all the hyperscalers. They're not cutting budgets right now. And so I think Nvidia right here, our models own it, and I think you can own it going forward.